Good morning, everyone. Right, so it got a little ugly last week, finally. Good part is, well, there's good and bad, right? Looking at the NASDAQ 100 here, and it's a vertical move to the downside. Power, right? A power move to the downside. It cut through this major support area. It closed underneath it. It certainly looks like it's going to go lower. Well, it looks like that gap got filled. I'm just eyeballing it, but you can see the bottom of Friday's bar. It looks like it's right into that gap fill. And there's another one down here. And we'll see where this goes. Um, so the beginning slide was where last week's wide range bars ending or starting. Clearly, this one was a starting wide range bar. We could look to this one as starting, but it refused to drop immediately and chop sideways. And there was news on this day. I forget what it was anyway, but it was an impressive gap up. And the next day we spoke about the equal weighted Qs versus the um, capitalization weighted one. And, the Magnificent Seven, what was up that day, had this big up day, and Apple had a big up day, subsequently fell all the way back down again. Another piece of information suggesting the bearish sentiment at this time. So Q's wide range bar gapping up, not even into the middle of it, but at least, we typically going to get some stabilization. There isn't much economic news to drive the markets today. Of course, anything could come out. We'll just have to see. But we've got, a pretty well-established, controlled downtrend on the hourly chart. You can see it began to accelerate, of course, on Friday when you got the wide range bar. Not what I would call a wide range bar that has a clear kind of a void. Got this resistance right there, which is right about at. You can see the cursor there, the lower right chart. You can see the overnight data and where prices are right now. So into that resistance area. And notice the weekly monster wide range bar down. So I look at something like this and, I believe, well, there's no way that's going to retrace back up to the high. And more likely it goes back down to this next support area and this whole number at 400. These minor support areas like the top of that bar, which is essentially where it stopped, give or take, should provide some stall, if you will. We'll see if it can retrace at all or what it'll do. Ideally, it would just drop further down and create a bigger void. We'll see what plays out, but clearly bearish move, right? Igniting, stabilization, reignite, a wide range bar, not as big as that one, but a relatively wide range bar, and little to no support to the left, suggesting prices are going to go lower. If we look at, technology, of course, which is the NASDAQ 100, we see the same vertical kind of a move, cutting through support at the next support level. It's gapping up a little bit. Monstrous weekly wide range bar down. So anytime we get a wide range bar igniting, and you can see the sideways consolidation, the rounding top that occurred here, you often get some stabilization. Whether that would be for the whole week, that's the unknown, of course, but we know after an igniting bar like that, it's often followed by a narrow range bar, which would be relatively easy to have a narrow range bar after a bar like that. The question is, how far could it or possibly retrace back into this before sellers show up again? And of course, just looking to the left as we do, what was support becomes resistance, and that pivot low there, put that on the other charts, and I already have it there. So that would be an obvious area if prices could get back up there. Now, if they could get back up there today, I'm not saying they can or will, but just thinking about if this could have a big green day today, And I don't think so, but I don't know. Again, if that would begin to shape my thinking as to the downside, now, when you have something like that, like a big red bar, a big green bar, we start applying bar by bar analysis. What does that mean? Well, it means it can go up, but go up to where? There's that minor resistance there. It's not that significant because it's beyond what's to the left. Maybe it could go further. But on the other hand, it could form, again, these are ifs, not are, it could form a pattern Dan coined many years ago as a bull sandwich, which means could it be followed by a red bar back down again after a big green bar? And if it did that, we would have to short it with a stop above the high, and down it would go. Well, what would be best? Yeah, maybe stabilization, a 1, 2, 3, 4 kind of a pattern. If it retraces up here today, it would close with a topping tail bar, which would be a clear indication of sellers aggressively selling into an intraday rally. So the takeaway at this point in time, as we look at the Nasdaq 100, the technology, is that it's extended to the downside. It's in an area of support. It's likely to stabilize, which is more likely to lead to some choppy price action today. Let me see what's going to happen. You can see the spiders accelerating down, didn't quite touch the line. Not that it has to, didn't quite touch the line. Maybe it would have if the market had stayed open. It's gapping up a reasonably large gap. I'm eyeballing that. I would say that's about, I don't know, 3/4 of that red bar. So it's a pretty strong gap up. Could bring in some buyers looking for it to go higher. We already look, this is up at that. Look at the pivot on the 15-minute chart. It's still at the bottom of the wide range bar on the weekly and still below 500. So 500 and 5,000 on SPX was a point where the battle started to hold that whole number. And then eventually, it failed on Friday. Now that number, that level, should become a pretty stiff resistance area if it could get there. So we see sellers here are coming in, since around 6 o'clock this morning, building a little resistance area. And we'll see what happens with that. SPX, pretty far away on the put side. It's gapping up here. I would say that should be a no-brainer today. Not that you wouldn't take some heat on it, but we'll see if it starts dropping early in the morning. Maybe premium opens up at 4,900. But anytime you have a whole number and you've got major support area, it's highly unlikely it's going to go there. And if it does, there's going to be a lot of buyers. Getting to this 50-50 area, unlikely it's going to get significantly above 5,000. So either number, take your choice. And as it moves around, premiums change, but neither of these numbers should be touched today. And our transports got crushed down through major support. The next support level is down here. Cursor there. It's down below where prices are, but it's stabilizing a little bit. So I think the flavor of the day is going to be stabilization, and we'll see which way it goes, one way or the other. Crashing down through the 200 MA. These support levels, obviously bearish price action. Just a quick peek at the futures. You can see the same stabilization on support. NASDAQ, wide range bar. Some support over there, but didn't get down toward the pivot, 17,000, the next whole number. Probably you'll get there, maybe this week. The Dow showed a little relative strength there, rejecting the move to the downside, but it led the way down. So if you're thinking on the long side, and it's a pretty sloppy here, Maybe this one can get a little further toward that topping tail bar. Russell, this was the big hope. I guess earlier in the year, the small caps were going to outperform. It's still early in the year. We'll see how much they come back. Um, crashing down through the 50 MA, pivot, down through the next pivot this year before bouncing back up again. So it's on a pretty significant support area. And we'll see how much it can bounce or the lack thereof. Crude oil down a little bit. I guess bombs didn't go off in the Middle East. It's holding for now. There was that rejection there. It's on some support. I think it's going to be sloppy here, like everything else. Gold retracing, coming down quite a bit. Still in an uptrend. It was extended. We spoke about that last week. It was extended. It should pull back. And silver really coming down pretty darn hard there. Wide range bar. This was at the top of the range, so it makes a lot of sense that you can see that it's where it's coming down and why it's coming down. What else? SMHs. We're kind of hoping, they were acting well, and then they didn't, and they got smashed. So this was really real damage was done. And look, institutional darlings, if you will, what's nasty, right? Get dumping NVIDIA, right? The golden child stock, sideways topping pattern, breakdown under the 50, room to fall. So that is suggestive that prices will go lower. Institutions are getting out. Microsoft is on some major support. Apple, right, had that big up day, and that fell apart. So there's nothing positive here. Excuse me, some of the banks had a good day on Friday. Some reporting earnings, RE, mostly the regionals, bouncing up like that. However, retailing, falling apart. So, I think things are going to chop around here a little bit, maybe advance a little bit before they go lower. Interest rates, up here a little this morning, nothing of great significance. And, our internals, they're getting there. They're getting there. Breath got almost tagged minus 300. We thought maybe, get an update here. That failed. The total put call ratio, if we get some more put buying, that'll get down into the lower bands.
Wait, Greg.
Go ahead, Dan.
Yeah.
I guess Dan's got
All right,
two.
yeah. No, sorry, I had a question here for you. Sorry. The breadth, that the middle blue one, how on earth did that bounce with the markets closing at the low?
Well, this is looking at thousands of stocks. Something went up, and it's realize what this is. This is how it's constructed. It's the difference between a 19 and 26 exponential period moving averages of the AD line. So here's your AD line, and where it got down here, you can see the cursor on the bottom there, and you see this data here, which was, more neutral. So it's dropping off older data and putting in, exponential, more weighted current data. So the moving averages begin to come together, and that's why the line lifts up. So being under 0 means that the 19 is under the 39, being above, vice versa. So all this tells us is that the moving averages came closer together. So you look at the data and you say, okay, does that make sense? You could, start calculating it by hand, but that is what it is. Um, so, this is the equity put call ratio, which is into these bands here. There was a bit more put buying near the end of the day, but look, some more downside should get the internals cooked and aligned together, which is, what we want to see. And that isn't suggesting that we're going to go back to the all-time highs. But what it does is it opens up for us an opportunity for high probability put spreads, looking for stocks that are showing relative strength for directional longs or climactic buys. That's what we'll be looking for in the coming days and weeks. So at this time, we don't have everything aligned. It's pointing towards some choppy price action, and we'll see how it plays out. Right now, I wouldn't say we have anything as a high probability opportunity as far as the broader markets, but we'll see how the days unfold. Also wanted me to look at the ETF. The 200 is down here, so it's bouncing up. IWM is bouncing up toward Friday's high, so that's a pretty impressive gap. But there's plenty of slop to the left, and as we do with areas of major support, we set alerts there to be aware of when it goes off. So we don't have to be focused on this if you're trading other things, but let the computer monitor it. And when the ding ding goes off, it'll tell you, the Russell 2000 is at an area of major support. And so we apply that same thinking to whatever the index is that we're going to be focused on. Right? Look to the left, see if there's something there, set an alert, assess the trend in multiple time frames, support resistance, factory work. All yours, Dan.
Good morning. Yeah, so this is the talk that we started on Friday, which is how much confidence of a turn are we looking for, knowing that we are close to trade the bounce, even if we're all in agreement. We'd love this thing to sell off another $10. I mean, that's the easy setup. But we started having the talk of, okay, let's not be a deer in the headlights. What are we going to look for to make money on this expected bounce? And at least for put spread, I mean, I got a huge list of climactic buy setups. I think 30-minute high, we'll go through our setups and see which ones look the best. I actually had diamonds as a put spread in the weekend letter. It's gapping over the entry, which is Friday's high. And that's just because this one made the best turn of selling a put spread. Remember, selling a put spread is we think it ain't going there, and we go through our checklist. They're liquid. We like the premium that we're receiving for the perceived risk, and we put on a trade. IWM, I like also 30-minute high. Let's see what the premium is. Diamonds only have Friday expiration, which I have no friggin' idea why they don't have dailies like the other three horsemen. Greg, Greg, I'm hearing clicks on my internet and power, so just a heads up. My TV went out. Can you all hear me still? Testing. All right, cool. My TV went out, so that's not a good sign. All right, I'll keep talking until I disappear. All right, so this alarm went off. Schwab is on our breakout watch list. So that tick right there set off my alarm. And it looks like it pulled in, so I'm just going to reset the alarm as well. Yeah, in our Facebook group, I published a big list of put spread ideas. This Home Depot is one of them. Alarm went off. Remember, we actually posted this on Friday, and I canceled it because it wasn't going anywhere, but it never triggered, and it's in the weekend letter. It's a Climo. That's that went off. SFM alarm. You see how this set my alarm up here. Nice closing breakout. So this one and Tyson are both same sector, food, grocery, whatever. And that's interesting that these two boring food stocks have wide range breakouts. Progressive, where I have my boat insurance, inverse head and shoulders. Does this daily, weekly, monthly look like they're having financial problems of paying claims? Look at that. Look at that. It's doubled. It's crazy. And they just keep jacking our rates up. So diamonds. All right, those are all my alarms on new things I'm watching. I don't have a single alarm on any opens, so that's good. We're still very short in our open list. These are a couple of earnings. Verizon. Whenever I see a beautiful concept, I think of our MT Live. So this is a multi-bar turn on major support. So this is a beautiful put selling candidate. If there's any juice down here. Now slopping around pre-market, but it has a void. So I have it in the middle chart here. This is an idea for a 30-minute high or any other compelling intraday setup. And DX earnings gapping down, no interest. Bose, a regional bank, downtrend, no interest. AZZ was up, down. We'll come back to you. ACI. The 30-minute high, I would do a put spread right here, the 20s. Let's come back to that. Zion, regional bank, big mess. Washington, I think regional bank, light volume, a mess. But put spread idea last week's low. TFC, another regional bank, gapping down. Now I'll leave this one on the list, even though it's going to depend on how deep it goes into Friday's bar. Possible put spread idea, 30-minute high. LI is a not earnings, but they're cutting prices on their EV stocks, and this whole EV sector. So that looks like garbage. Tesla, we all know, has been the dog for a while. I've been saying I think it's going to $1.25. Has earnings this week. I think we have 4 Mag 7 stocks reporting this week. So that's going to be a big mover on the Q's technology. But this looks horrible. They're having to cut prices. Wow, that's a $7 gap down now. That's a big percent support thing. I forget which day they're reporting earnings, but ideally, hypothetically, it's Thursday. So then that'll give us 4 more trading days, and that would be great if it just continues to sell off for another 4 days. Then that would be an excellent put selling candidate into earnings. Tomorrow, I think. Sorry. Cream, Dow 30 says they're not going to buy this INFA. So they're gapping up. That's a put spread idea. INFA down 33.40. That's a call spread idea. Adobe, we're actually in a call spread. This could be a day trade short under Friday's low. Because then that would be relative weakness, right? Anything not gapping up with the market is relative weak. In terms of Dow 30, UNH is pretty much the only red one. This now looks like a call spread candidate. This looks great. I will put that in a window. UNH call spread. And that this red bar was gap up on earnings. All right, Schwab alarm just went off again. Let's put that bottom right, looks good. Next, I think was on Alex, your list, little buy setup there, looks good. The halving is done on Bitcoin, so getting some upside gaps there. Big old trading range broke down. Ether, we saw some buying into the end of the week. Other things of interest, let's just go through my watch list for the remaining 2 minutes. USFD, call spread, day trade short under last weekend's low. What's Gregson? Okay. So just set an alarm. That's what I did on a number of these. I set an alarm 49.80. SSRM, bottoming pattern. That's a silver. Sedger. It's weak. It's breakdown weekly, monthly. I don't short things that go from the top of the range to the bottom without a continuation pattern. GBDC closing breakout. Let's see what that does. This one I got from Sam, I think, looks great. Buy setup, deep retracement, 5,200. So I actually sent it to Telegram yesterday. I added it to our weekly list. Toll Brothers week, just set an alarm. But I also said the last couple of days, the easy pickings on new shorts, I think, are over, meaning it's harder now to find new short entries with the market down so much. I mean, we'll do them if it's a good pattern, but I'm going to be, defensive on the stops. ECVT alarm just went off. That's the one I was just talking about. So let me put that in a window. ECVT. I've never heard of this symbol. APO is a breakdown candidate. We actually have a call spread. ALV is a short idea. It's actually gapping up. So now I seriously doubt it's going to trigger, but just leave the alarm there. Now this one is a classic breakdown failure. Snapped right back. So ideally I'll go sideways here. All right, a couple of alarms going off. IDXX is a Climo watch, nothing to do now, but early alarm. GBDC, that's the one I just said. Closing breakout, that looks great. I just don't trade in the first 5 minutes, particularly on Mondays. We got a nice tick here. All right, Schwab. All right, let me say goodbye to YouTube. Let me see YouTube. So have a great trading day.